Hi, everyone. Today, we're diving into funded futures trading programs, what they are, how they work, and how you can make the most of them. Our goal is to give you a clear, straightforward overview so you can decide if this path suits you. We're from the TradingFunder team, here to help traders like you understand the ins and outs of this exciting opportunity. So sit tight and let's get started. Hey, quick heads up. I've got exclusive discounts and coupon codes from 30% to 90% waiting for you in the description, thanks to our partnership with major prop firms in the market. And if you want detailed, honest reviews on funded trading programs and prop firms, just head over to TradingFunder.com. All right, let's continue with the presentation. What are funded futures trading programs? Funded futures programs are basically evaluation challenges. You pay an entry fee, sometimes monthly, to trade a simulated account following specific rules. If you meet profit targets without breaking any rules, you're offered a funded account to trade live or simulated. The firm then shares profits with you, often keeping a portion, say 20%. Interestingly, a large part of the firm's revenue comes from traders' entry fees because many traders don't pass the challenge. So it's like auditioning for a chance to trade with big firm capital, but be aware many people fail and lose their fees. It's a way to get funded without risking your own money up front. How it works briefly. First, you choose an account size and pay a fee, monthly or one time. Then you trade in a simulated environment, following rules like profit targets and max daily loss. If you succeed, you sign a contract and become a funded trader. You then share profits, commonly 80% to you, and can withdraw earnings. Many firms keep traders on a simulated account even after funding, managing risk via rules. Remember, most traders fail, so it's important to understand it's a testing ground. The evaluation challenge. During the evaluation, you pay a fee and pick a demo account size, then follow strict rules. Make a profit target without hitting daily or total drawdown limits. You usually need to trade for a minimum number of days, say 10 or 15, and avoid holding trades during major news events. If you pass, you're offered a funded account. Think of this as a high-stakes audition. You're proving your skills under pressure. The rules are designed to test discipline and risk management. Getting funded. When you hit the profit target within the rules, you sign a contract to become a funded trader, usually as an independent contractor. Some firms keep traders on a simulation even after funding, only paying profits if they hit certain milestones. Risk is managed with the same drawdown rules as during evaluation. Once funded, you can withdraw a share of profits, often 80%. Think of it as a transition from audition to real trading. Your performance determines if you stay funded. Profit sharing and withdrawals. After becoming funded, you start sharing profits. A common split is 80% to you, 20% to the firm, but some firms offer a higher share, like 90% or even 100% on initial profits. Payouts are usually done through PayPal or bank transfer, sometimes with specific schedules, monthly, bi-weekly, or after certain thresholds. Remember, the firm takes a cut, so your actual earnings are less than gross profits. Always check payout rules to avoid surprises. Think of it as a partnership where your performance determines your payout. Pros of funded accounts. Funding programs let you trade large accounts without risking your own money. You only pay fees during evaluation. Afterward, you can control big positions, potentially earning thousands. The strict rules teach discipline and risk management, making you a better trader. Many programs offer education, webinars, and mentorship, helping you grow. Plus, since you're not risking your own capital, the psychological stress is lower. It's an excellent way to accelerate learning and build a track record. Cons of funded accounts. On the downside, these programs can be expensive. Many traders pay multiple fees trying to pass. Rules like daily loss limits and trailing drawdowns are strict. One mistake can disqualify you. Payouts may be delayed or limited initially, and profit splits mean you don't keep all earnings. Most traders fail the first attempt, and trading under pressure can be stressful. Be prepared for the challenge and understand it's not guaranteed income. Major prop firms in 2025. The main players include Topstep, known for transparency, EarnTrade, which combines education with evaluation, Apex, popular for affordability, and MyFunded Futures for reliable payouts. TradeDay specializes in futures and is gaining trust. Be cautious with firms like Lilu, which have mixed reviews and controversy. Choosing the right firm depends on your priorities: trust, cost, rules, or support. Notable firms and their reputation. Topstep is highly trusted with many positive reviews. Earn-to-Trade is praised for its educational approach, great for beginners. Apex offers affordability and flexibility, making it popular. MyFunded Futures is known for smooth payouts and good support. TradeDay is newer but gaining respect. Be cautious with firms like Lilu, which have had issues with account closures and support. Do your homework before choosing. Firms with controversies and warnings. Some firms like Lilu and ETF have received warnings for questionable practices, payout issues, or account closures. Elite Trader Funding has also faced complaints. Always do thorough research. Read reviews on Trustpilot, Reddit, and forums before committing. Trustworthy firms are transparent, have long track records, and positive trader feedback. Avoid those with red flags to protect your capital and sanity. Comparing key features and rules. Here is a side-by-side comparison of major prop firms. It covers evaluation costs, rules, profit splits, payout options, and reputation. This helps you see which firms fit your style, whether you prefer strict rules, educational support, or flexible payouts. Remember, always verify the latest info directly from the firms, as rules can change. Use this table as a quick guide to identify the best fit for your trading journey. Final thoughts and resources. In conclusion, funded futures trading programs can be a valuable path, offering access to big capital and accelerating your growth. But they're not a shortcut to easy money. Success depends heavily on your skill, discipline, and understanding of the rules. Many traders find these programs beneficial, but beware of costs, strict rules, and potential pitfalls. Always do your due diligence, read reviews, understand fee structures, and choose reputable firms. Think of these programs as an audition or a paid internship, an opportunity to learn and grow. For more info and the latest discounts, visit TradingFunder.com. Happy and responsible trading.